Question 765. Which of the following is an ad valorem tax? A. Use tax. B. Real estate tax. C. Value added tax, VAT. D. Income tax. Correct answer is B. Real estate tax. An ad valorem tax is a tax whose amount is based on the value of a transaction or property. The Latin phrase, ad valorem, literally means, according to value. A use tax is a tax on the storage, use, or consumption of a taxable item or service on which no sales tax has been paid. It's a complement to sales tax and is typically a percentage of the purchase price, making it ad valorem. However, it's often levied after the initial transaction, not directly on the value as the primary assessment. Real estate tax, also known as property tax. This is a tax levied on real property, land and buildings, as a percentage of its assessed value. This perfectly fits the definition of an ad valorem tax, as the tax amount directly correlates with the property's value. A VAT is a consumption tax levied on goods and services at each stage of production or distribution where value is added. While it is ultimately borne by the end consumer and is a percentage of the value added at each stage, it's a specific type of consumption tax. However, it is an ad valorem tax in nature because it's based on value. Income tax is a tax imposed on individuals or entities based on the income or profits they earn. The tax rate can be progressive, meaning higher income pays a higher percentage. The tax itself is on the income earned, not directly on the value of an asset or transaction in the same way as a property tax. Out of the given options, real estate tax is the most classic and direct example of an ad valorem tax, where the entire tax is directly calculated as a percentage of the assessed value of the property. While VAT is also ad valorem in principle, real estate tax is a clearer and more universally recognized example of an ad valorem tax in this context. Therefore, the most accurate answer is B. Real estate tax.